What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown. We're going to do a quick update on the markets here since we've seen some breakouts in certain categories that I've been talking about for a while on this channel. And we'll look at some of the drivers that are causing some of the breakouts and some of the stagnation that's been happening in other parts of the markets. Let's dive in. All right, guys, so I'm recording this Wednesday, July 8th. We're seeing finally a breakout in the spot price of gold over $1,800 US dollars per ounce. Finally, the futures prices have gotten above that before today, but today we're finally seeing that in the spot price here. So we've got kind of a relatively light volume range between 1800 and 1900. Back in 2011, when the price of gold initially got all the way up to 1900 there, it was there for a very small amount of time. So from the standpoint of resistance and support, there's now a lot of support there at that $1,800 level because there was, quite a lot of resistance there back in 2011, 2012. Quite a lot of resistance here in the last couple of weeks, last couple of months. And so anything that was prior resistance becomes new support once there's a breakout. So as long as we sustain the breakout here, that $1,800 level should be good support. Not a whole lot of volume up to 1900, but since 1900 was the previous top, I would expect that we'll probably rally pretty quickly towards that $1,900 level and then fall back down, maybe retest that $1,800 level again. So I would expect us to be in this range for a little bit here. So I made a video a couple of weeks ago about my price targets for gold, and I said that July was going to be the month for gold and silver, and so far it's looking like that's true here. I kind of pulled back. I had my time frame set on 1900 for the end of the year for my gold target. Now it looks like that recent video that I made saying that was going to happen in July looks like that's looking like it's holding up so far. Silver, we're seeing a breakout as well. We're finally seeing a breakout above the trend line there, and so I'll throw a chart up here so you can see it as well. But we're seeing this breakout here, and so silver has a lot more room to run than gold does, and so silver is always going to have that more risk to reward ratio compared to gold, and so it looks like we're starting to see that breakout there in silver. And contrasting that with Bitcoin, we've been in this consolidation pattern with Bitcoin. You can see here this kind of wedge that's been forming this triangle. We've been testing that upper trend line for a while, and the more times an upper trend line gets tested, the weaker that trend line becomes. However, I would not be surprised at all to see us fall back down and test that bottom trend line one or two more times while we consolidate inside this triangle before ultimately breaking out. But on a triangle like this, a breakout either way is going to have some strong momentum here. So whether we break out to the upside or the downside, expect that move to be pretty strong once it happens. Now, taking a step back to gold, I want to mention, because I forgot to mention a couple minutes ago when we were talking about it, the gold price is largely being driven by short covering from bullion banks and trading desks, and so there's still a lot of open interest on the short side from the banks, and so that's largely what's driving this, even though some of the technical indicators make it look like gold is very overbought right now. From a technical analysis standpoint, that looks true, but from the fundamental side, the drivers behind what is forcing the price of gold up here, looks like we still have a lot of wind in the sails here because there's a lot of short covering. The higher that price goes, the more those losses are going to have to be closed out, which when you're closing out a short, you're buying, which contributes to buying pressure, which pushes the price up. And most of the net long institutions right now are standing for delivery. And so that means that the environment right now is still fundamentally very much bullish for gold and silver as well, even though the technical perspective does look like it's overbought at this point. Now, moving on to the markets, we've got the S&P 500, the Dow, the Russell 2000, and the Nasdaq. Those are the four major indices that we look at here in the States, and they're showing different signs here. So if you look at the S&P 500, really since the end of May, we've kind of been, stagnated here. We've been moving up and down, but haven't made that much progress either direction. Same thing with the Russell 2000, although it does look a little bit more bearish. We see a little bit more of a downwards trend forming in the Russell 2000, which, as you know, is the smaller companies. The S&P 500 is the largest 500 companies pretty much, and the Russell 2000 is the small companies. And so we are seeing a lot more weakness in the smaller businesses in America, which, as you can expect, the big businesses are the ones that got the bailout money. They're the ones that got the stimulus money. The small businesses were the ones that weren't able to access it as effectively. They're the ones that are most effective. They don't have the infrastructure to survive. They don't have the large resources politically and capital-wise to survive through hard times. And so you're going to see a lot more weakness in the small businesses when recessions happen, especially something like what we're going through right now. Now, the surprising thing, though, is the Nasdaq. So the Nasdaq, as you can see here, has shown a lot more strength. We've been seeing new highs in the Nasdaq, and that's largely been driven by a couple companies that have really benefited from this, like, Amazon, for instance, has, skyrocketed to all-time highs recently, and it's almost doubled, really, since its bottom when the panic first set in March. Now, I made another video that you can take a look at about the Treasury general account being the balance going up a lot right now. It's almost 1.7 trillion at this point. You can go and take a look at that video for a deeper explanation of what I'm talking about here if you're not aware of it already. But basically, everything that the Federal Reserve has done in terms of printing money, it looks like about half of that hasn't actually been deployed into the broad money supply. It hasn't been deployed into usage in the economy. It's built up in the Treasury general account due to the structure of the system that they established to help out with the last crisis in 2008. And so that means that the Treasury has a $1.7 trillion bazooka right now that at any point of their choosing, they can fire it. And so it looks like right now we've seen two kind of main ways that they're looking at spending this massive amount of money. Number one, it could be an infrastructure bill. Number two, it could be another round of stimulus checks, which Trump just said today. They're looking at doing another round of stimulus checks before the election. And it could be a combination of both as well. But I would be absolutely shocked if they did not spend that money soon, because it has the same effect on the markets and the economy as the Federal Reserve doing quantitative easing. It's money being shoved into the system. And so everything that we've seen so far since the beginning of this rescue plan started in March has only had about a 50% effect of what it could have had, because about 50% of the money that the Federal Reserve has tried to deploy has gone just drained into that reservoir at the Treasury general account. And so they are, able to, at any point of their choosing, launch that in some way. And so if they choose, more a heavier amount of stimulus checks or an infrastructure bill, spending plan, whatever it is, they have the ability to duplicate pretty much almost what we've seen already. And so because there's a little bit of a lag, I would expect this kind of spending to start to happen relatively soon, because people in power are going to want the effects of that to be seen right before the election, so that they can claim credit for it. Now, in case you're new to the channel, I don't think any of this is actually good for the economy long term. I don't think artificial stimulus, money printing, all that is good for the economy. I think these are, artificial measures that are really just Novocaine and morphine for an economy that is addicted to painkillers and dying of a cancer. And so it would be far more healthy to kind of start from scratch, pull out the support, pull out the bailouts, pull out the money printing, repeal a lot of the regulations and laws that are making it hard for business to make choices that would be better for everybody. Let the bad parts of the economy die off, and let everybody rebuild from scratch in a much stronger way. So in case you're new to the channel, that's the perspective I'm coming from, but I'm also a realist, and I understand that's very, 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 very unlikely to happen. And so understanding what the people in power are likely to do, you can get a good idea for what the market's going to do in response. You can trade it and make money off of it. So just want to give you guys a little bit of a market update here for today, since we haven't had that much crazy market news happen recently. And depending on how the next couple of weeks, maybe couple of months go, might have to revise some of the potential outlooks for after the election, depending on whether it looks like Kanye may win or not. Two housekeeping items for you guys. I want to let you know, number one, this weekend my grandfather actually passed away, and so over the next couple of weeks my video frequency might be a little bit lower than usual, just to, as I'm helping out the family with doing some stuff here. So just want to let you know about that. Number two, thank you so much for all my new subscribers and all of my subscribers who you guys have been with me from the very beginning. The channel just passed 10,000 subscribers, which is really exciting to me, and it allows me to open up the merchandise shelf on YouTube. So under the videos within the next couple of days, you'll see that there's going to be a merchandise store there that you can purchase stuff from. So I'll throw a couple shirts and a mug in there to start. And with that, I appreciate you guys again. Thank you for watching. You're the best. Have a great day.